Did you know that in Toronto, nearly 100 tenants have been participating in a rent strike to fight for better living conditions? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. Let's get right to it. In a situation that's been developing for months, residents at 1440 and 1442 Lawrence Avenue West in Toronto are heading to the Ontario Landlord and Tenant Board for a week of hearings after a prolonged rent strike. According to City News, tenants have been withholding rent for as long as 8 to 9 months to push for improvements to their living conditions, which they've been advocating for over the past 5 years. These tenants have been vocal about their struggles, citing issues such as water ponding, fire damage, and pest infestations. Soyab Kastura, a resident and participant in the rent strike, spoke to City News about the dire state of their apartments, saying, "We are struggling so much in the last 5 years." He highlighted ongoing problems with cockroaches, bed bugs, and mice that have made daily life challenging for many families in the complex. Bruno Dobrusin, an organizer with the York Southwest Tenant Union, emphasized the importance of landlords maintaining their properties. He pointed out that tenants are not seeking free rent, but rather fair rent in response to the conditions they face. The property owners have made applications for above-guideline rent increases, which exceed the current annual cap of 2.5%, claiming these are necessary for capital improvements. As these hearings commence, there's hope that the Landlord and Tenant Board will take the tenants' testimonies seriously and that the property owners will engage in meaningful negotiations. Duberson expressed optimism, noting that, "We're actually also hoping that the landlord is going to come down and negotiate and use the Landlord and Tenant Board as a space to do that. It has happened before." Now, let's shift gears and discuss an important topic for investors in multifamily real estate: mortgage loan insurance for rental investments. The Canada Mortgage and Housing Corporation, or CMHC, offers a product known as CMHC Income Property, which is specifically designed for 2 to 4 unit rental properties. This insurance product opens up a range of financing options for investors, making it easier to secure funding when purchasing a rental property. CMHC Income Property provides flexible debt service qualification options. Borrowers can include up to 50% of the gross rental income from the subject property in their debt service calculations. Alternatively, lenders may use a net rental income approach, which considers gross rents minus operating expenses. This flexibility is especially beneficial for investors aiming to maximize their purchasing power. Eligible borrowers for this program include Canadian citizens, permanent residents, self-employed individuals, and corporate borrowers who provide a personal guarantee or have a co-borrower. The properties must be non-owner occupied with 2 to 4 units and located in Canada. The maximum loan-to-value ratio for these properties is 80%, meaning investors need to cover at least 20% of the property's value with their own funds. Moreover, CMHC Income Property allows for a maximum amortization period of 25 years, and the purchase price or lending value of the property must be below $1 million. Down payments can come from traditional sources like savings or the sale of another property, and there are options for both single and progress advances, depending on the improvement costs involved. Another key feature is the consideration of creditworthiness. At least one borrower must have a minimum credit score of 600, but CMHC may consider alternative methods for establishing creditworthiness for those without a traditional credit history. This inclusivity broadens the pool of potential investors who can benefit from this insurance product. In terms of premium rates, they vary depending on the loan-to-value ratio. For instance, if the ratio is up to 65%, the premium is 1.45% of the total loan amount. If it falls between 65.01% and 75%, the premium increases to 2%. For ratios between 75.01% and 80%, the premium is 2.9%. This product not only helps investors secure financing, but also supports them in making smart home buying choices with a variety of financial planning tools available from CMHC. It's a fantastic resource for anyone looking to invest in smaller rental properties, offering both financial flexibility and peace of mind. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. See you on the next one.